Hey, this is James Pelton, and I was out of town over the weekend. We went down to New Orleans for the LSU Florida State game. Go Noles, I will say. And it was a lot of fun. So I'm not making my own video today, but I brought in a good friend and a good mentor. His name is Justin Donald. He's a best-selling author. He wrote a book called Lifestyle Investor, and he's been, I say in the interview with him, that he has been the most influential person to when it comes to me and my finances, apart from Jesus. Okay, you can't have more influence than he does. But he's got some great things that he shares with us. I think it was really, from my perspective, it's good to have a wide range of people that you listen to so you can get information just from all sorts of different people. And he's not a crypto investor. He's a lifestyle investor. So he's just looking for passive income to quit your 9 to 5. And crypto is just a small part of what he does. So again, me and him would kind of see crypto a little bit differently, but again, I think that's super helpful. We don't need to argue about how, should your crypto portfolio be 90% or 2%? Different people with different risk tolerances, different goals, and all those things. So really happy to have Justin on. Here's my interview with him. And if you want to get more involved with him, he has a free book that he'd like to give away, a training course, some master classes, and a mastermind group. So I'll talk about how you can get involved with all those at the end. But yeah, here's my interview with best-selling author Justin Donald. All right, well, hey, this is James Pelton, and I'm very excited today. I have Justin Donald. So he is a mentor of mine. He's the author of, I think, Wall Street Journal #1 bestseller, right? The Lifestyle Investor, 10 Commandments of Cash Flow for Passive Income and Financial Freedom. And that's really what my channel is all about, is this passive income and financial freedom. So I was excited to have you on. And just a personal note, too, I would say of everyone that I've interacted with or learned from, I don't think there's anyone else except for Jesus. Jesus is #1. But other than that, I can't think of anyone who's impacted me more in how I think about money. So you've been really helpful for me in that. Justin, thanks for hopping on. Really appreciate having you, man.
Well, James, thanks for having me. I'm excited to be here. And, it's neat to see all the cool stuff that you're doing, the impact you're having, the education that you're sharing on such a regular basis. Your following is a testament to the value that you're, bringing people. So great job to you. And it's cool to connect in this format where I get to be on your show, which is cool.
So when you talk about cash flow investing, can you kind of talk about what you mean by that and how it differs from how people normally think about investing?
Yeah, it's interesting because a lot of people think that they're cash flow investing when they're really not. What my goal is, and by the way, a lot of people don't even think that cash flow investing exists, that it's even an option, right? So my goal is to help people learn how to buy assets that produce income regularly, right? And that ultimately buy their time back. Most people I've found to be slaves to the job they have, to the income that they make, to the security that they become accustomed to, or the lifestyle that they're used to living. In some way, shape, or form, you get these handcuffs that are hard to break free of because we want things the way that we know them, the routine or the lifestyle. And so we can get trapped pretty easily. And so I want to help people buy assets that produce income regularly, that we can get utility out of today, not when we retire, not when we're 65 or 75 or later, but today. You get utility today. And with your market, I think, or your audience, I think it's even more important to consider this in a world where a lot of people are investing in crypto. And by the way, I love crypto. I love Bitcoin. There's tons of projects that I think are great. But the world we live in today operates on fiat currency. So to own assets that actually produce fiat currency that you can then use, in the world for commerce, or to use a part of that to buy more crypto or whatever else it's going to be, I just think that that's kind of a good way to live until things turn to maybe a little more crypto friendly. The masses still don't know, don't understand, don't comprehend the future of decentralized finance.
One of the things that makes me, when I think about it, it makes me sad is people that don't like their job, that have to go work 9 to 5. It just makes me really sad. I mean, today's kind of a rainy day here in Lincoln, Nebraska, and I woke up just feeling not super motivated to do much. And I was just like, man, what if I had a 9 to 5 job where I like had no choice to, sit on my couch and read for a little bit and things like that. And so I think we're really aligned in that, wanting to give people financial freedom. Since you brought up crypto, let's start by talking about that a little bit. So you would be much more on the traditional investing side of things than most of my audience. Could you talk about how you, as a traditional investor, how crypto fits into your portfolio? Like maybe like what percentage is it? How risky do you consider that compared to your other assets? And maybe just how you think through it as a traditional investor?
Sure. Yeah. So this is really fun. I love a lot of projects. I mean, we all know, everyone, that's listening to this knows that not all crypto projects are the same, right? Not like there's a different risk profile with virtually everything that's out there. And we've seen a big shakeup here recently. Now, that doesn't change the fact that some of the greatest innovations are in the process of being made, or we haven't even seen them yet, but they're to come. But I think Bitcoin is in itself, a standard. I think that's, I think that's here to stay. You might see fluctuation in price based on, fear, or based on the stock market. Right now it's kind of correlated, and it'll be nice to see it truly uncorrelated. And maybe even opposite. When there's fear in the markets, the price of Bitcoin rises because there's confidence in Bitcoin. We're not there yet. But I do think that's a mainstay. Now, I think there's some other projects. I think Ethereum's great. I think there's some other projects that are great, will be great. The thing is, there are a lot of them are probably pretty speculative. That doesn't mean you can't make money, and it doesn't mean that maybe you don't have an allocation where you take a moonshot. But for me, I just care so much about making sure I don't lose money that I would rather take the shots that are more of a sure thing. So it's not that I don't like it. I think everyone, period, should have at least 1% of their net worth allocated in Bitcoin. And I would say for most people, probably even up to 5 or 10%. And you can mix cryptocurrency in there as well. But for me, there's really just like 5 to 10 projects that, I feel really comfortable or feel very confident on. And other ones, like, it doesn't mean I'm not going to invest in it. I just see it as speculative. It's like going to the casino and, putting money on red at the roulette table. Some projects are like that. Maybe you make money, but I want it to be a specific allocation, and I want that money that I put into it to have come from an asset that is cash flowing. So it's cash flow that's already passive, that is going to show up again next month, and the following month, and the following month. So anytime I'm investing in a risky way, I want it to come from cash flow that is repeat cash flow.
When you look at, so you have in your book, you have the 10 commandments of cash flow investing. And we don't have time to go through all 10. People have to get the book, which we'll talk about at the end here. But of those 10 commandments, which ones do you feel apply really well to crypto investors and to people who are putting money into crypto? Like, what are some of those commandments that you think people should really be keeping in mind as they invest in something as risky as crypto?
Yeah, so this is an interesting question because, my 10 commandments are really my criteria for investing. And so if something matches all 10, then to me, it's a slam dunk that I'm going to invest in it. But that isn't always the way that it is. And so when I think about lifestyle first, I really like to invest in things that are lifestyle first. But I think it's important to not over allocate. So for anyone that feels like they have to check the prices of stuff every day, that means that maybe you have too much allocated, because when I invest, I don't look, I don't care. Like, this is a long-term play. The day-to-day I don't want anything that's going to impact or influence my lifestyle, my mindset. And so I have a lot of friends that freak out all the time with these big dips and the spikes, and they're so excited, but then it crashes and they're freaking out. Like, that to me just means you have way too much exposure. I think that putting lifestyle first in your investment thesis is powerful. My second commandment is to de-risk the deal. So how do you find ways to make an investment less risky? With Bitcoin, I'd say one of those ways is to dollar cost average in. At any point in time, you can say it's too expensive. At any point in time, you can say it's going to go up. Like, it's interesting. Like, in these small little windows where it's like right now, Bitcoin, we just hit 25K again, and whatever that looks like. It's easy to say that it's expensive right now, but expensive is a relative term. Or it's easy to say it's down, or it's going to be worth way more. If long term you believe that it's going up, then it probably makes sense to just keep buying. If you think it's going to be more than what it's worth today, at some point in time, it probably just makes sense to buy in at a certain time over a period of time, right? Another commandment that I have, my third one, is invisible deals. Find invisible deals. Those are deals that are not open to the public. Those are deals that have some pretty cool terms associated with it. Maybe you can negotiate some preferred terms, but I don't like competition. If I have a business and I'm looking to exit, I like competition. If I'm coming in on an investment, I don't want competition of other people pushing the price up. I want to get in at the best terms before no one pushes the price. So, those are a few things. To me, most crypto projects aren't going to do a lot of the 10 commandments that I have laid out. So, like, number 4 is so important to me. When you think about like getting principal back quickly, that's really hard to do in some of these projects. But the moment you do, instead of letting it ride, take money off the table, right? And that way you're playing with house money. Everything that's there, you're not going to lose money if it crashes. And if it goes up, you still have some money to play with. And commandment number 5 for me is cash flow, regularly. Like, I want to be able to create cash flow. I want to be able to create it immediately. And most crypto projects aren't going to do that. And some of the ones that were doing it kind of didn't make it, right?
Yeah.
There's been an implosion because foundationally and fundamentally, they just weren't sound. But I think future projects are going to figure out from those mistakes, and they're going to be better.
Absolutely. And I love what you said. And actually, Dinesh, who's someone I met through your mastermind group, which we'll talk about here in a little bit, he said, this has stuck with me, but he said he does the can you sleep at night test. And he knows he invested too much in something if he says he can't sleep at night. It's keeping him up. He's thinking about it. So that's the test he uses for, did I put too much into this particular project or into this particular deal? Maybe can you give an example of a traditional deal that you might get into compared to a crypto deal? I think people don't even realize what type of investments are out there, like what the opportunities are. And along with that, can you touch, are these deals that you get into, are any of them available for like normal wealth people, or are they all, do you need to be accredited investors? Can you talk through that a little bit?
Yeah, sure. Great questions all the way around here. One thing I would say is most people, when I tell them the type of deals that we're doing, they don't even believe it. They don't even think it's possible because they're so lost in this world of trusting financial advisors and giving them all the control and all the influence and letting them make all the decisions. I think it's really important that we educate ourselves and we take control, we take ownership of our financial future. So deals that I like to do, sometimes it's with private companies, sometimes it's with real estate, sometimes it's with senior secured debt, meaning that I'm in the first or most secure position and I have assets that collateralize or protect my investment. So if something goes wrong, I get to take control of the asset that's worth more than the investment into it. Those are all kind of, ways that I invest. So, a few quick examples, like I did a deal where I bought a dog training company. And that dog training company, we just kind of enhanced some of the SEO. We opened up the calendar for more appointments. We ended up ramping up the revenue and the profit. And I created with my operating partner an accelerated distribution schedule. So that just means that since I put the money in for this, so let's call it $100,000, I put in $100,000. Well, before he makes any money, or maybe he makes 10%, I get 90%, regardless of what the economic splits are, regardless of who has what equity. I'm creating a repayment program for me to get my $100,000 back before he makes anything substantial. So then I got all my risk out of the deal. So in that example, I had all my money out of the deal in less than 6 months. And then we ended up selling it at a year and a day for an 11x. So we made a good return. There was cash flow every single month. I had all my money out of the deal. And then I had equity in the deal when I had, no risk. I did that with real estate many times over, where I buy an asset. Someone either comes and buys it. What I like even more is when it just gets refied out. You go to the bank and you say, hey, we've raised rents, we've increased occupancy, we've made this property better. It's now worth more. We want to refinance it. And so you can take out equity and get paid back. And so I've done several deals where in a year or a year and a half, the money I put in, let's say I put in $100,000, I get $100,000 back at a year or a year and a half, and I now have equity, but all my money's out, and it cash flowed for every month for that whole time frame. So the odds of me losing money are really low, because if you lose money, you got to work twice as hard to get it back, and you will never recapture that opportunity loss cost. That is forever a loss. So I'm not looking for the biggest return. I'm looking for singles and doubles and to not lose money. I don't need a home run. I just need to get on base. And then if I can do that consistently, big things will happen.
Okay, I think that's super helpful. So what would you recommend to people that don't have a lot of capital right now? So there's a lot of people, they're like, I'd love to do that deal. I'd love to get into real estate, but I need $100,000 and I have $2,000 in the bank. What advice would you give to someone that wants to get to that place but is not there right now? What advice would you give to someone in that situation? And maybe along with that, what is kind of the minimum number that you need to kind of start getting involved in some of those types of deals?
Yeah, it's interesting because I threw that out there as just a random number. You could do it with 25,000. You can do it with 10,000. I mean, there are now these opportunities, these different platforms where you could put in as little as I think even $100 and be able to get a piece of real estate where you're a limited partner in a bigger opportunity. With many investors in a syndication, which is just, a group that raises a bunch of money for a project. So you could do that in real estate all day, every day. You can do that in lending. There are lending platforms where you can be a senior secured lender, even with these small dollar amounts. So, some of these platforms maybe start at 100, some at 500, some at 1,000. But you can do this at any amount. So maybe you're not taking down a whole property yourself, but you don't have to. You can go in with other people. These are like, crowd-funded type of sources. And you'd asked earlier, do you have to be accredited or not? No. Sometimes yes, and sometimes no. Depends on the deal. But a lot of these deals, a lot of these crowd-funded deals, you do not have to be accredited.
Okay. No, super helpful. And yeah, some of them I've even had on my channel, like VinoVest, which I know you've met with them before too, but that's a fairly safe place to put your money. I mean, compared to crypto, especially, you're going to get a lower return. You're going to get 12% or 15% or something like that. But there's places like that. Fundrise, I know, is a real estate kind of crowdfunding one. Do you have any other favorites that you might recommend to my audience?
Yeah, CrowdStreet is a real estate one. Peer Street, I think, is a lending one. I mean, there are tons of these that are out there.
Okay. So for you, and again, people, my audience, you don't have to just take Justin's advice and just take it as, okay, I'm going to go do that. Like, just take what he says and, put it into, I call it the stew of your internal decision making. But for you, if you had just maybe, we'll say $2,000 starting out, you probably would not go put it into a risky crypto project and hope for 1,000x. Am I right about that? What would you do with $2,000 starting out?
Yeah, I definitely wouldn't. It doesn't mean I wouldn't put a portion in. If there's maybe something I'm really bullish on, maybe I put $100 into something, but I would probably take the lion's share and put it into something less likely to lose. So, like, think about real estate. If a real estate deal goes wrong, you're generally not losing all your money. The value of a piece of real estate doesn't go to zero, right? If something burns down, you've got insurance and that covers it. If you're in the stock market, if you're in the crypto market, stuff goes to zero. You can lose money. If you're on margin, you can lose more than you have in, right? Like there are situations where you can really get into trouble. With real estate, it is really hard to lose money, but if you do, you're not losing all your money. And so that's, unless there's some shady players going on, like you got to do some homework, but find people that have a track record, find people that have other investors that have invested for a long time, and ask them what they think of it. Like, success leaves trails. It leaves a trail. It leaves clues, and you just got to follow that up.
Okay, I think that's awesome. I think that's great advice. Yes, find somebody who's gone before you, and you can learn from their mistakes. Like you and me both have made a lot of mistakes, and we've learned from them. So you don't have to make those same mistakes. You can just follow. Maybe along with that, what's one of the biggest mistakes that you feel like you've ever made that taught you the most about finances, that you think my audience could learn from?
Yeah, I've got a couple of situations, one of which I invested in my very first home. It was a condo in Chicago, but it was like during it was like right as the market was peaking right before the financial crisis. So I was immediately upside down after I purchased this. So I bought it at a super high price because the market was just, getting really competitive. And in order to secure this property, I had to pay too much, but I just thought it was going to keep going up, and I was pretty naive. Didn't understand market cycles, and so that deal crushed me. I eventually rented it out. I lost money every month, but I couldn't sell it because I had to come to the table with like $130,000 because I was that much underwater. So when I finally closed, I held on to this thing for like 4 years, and when I finally closed on it, maybe it was 5 years. I had to come to the table with cash. So it's not like I made money on the deal. Like I had to scrounge up over $130,000 just to get the deal done. It was painful. And then another time I invested in a Ponzi scheme, and everything was going great until it wasn't. And so I just kept putting more money in over time, thinking that things were going to get better. And you've seen some similarities in some of these crypto projects that have gone under. The writing was on the wall, only because I've experienced it, though, right? Like if I hadn't experienced it, the writing's not on the wall. Today, I see stuff I didn't see because of the pain of losing money, which is my number 2 commandment is to de-risk the deal and not lose money. And so if I'm going to make that mistake, then I need to learn the lessons.
Yeah, no, and usually there's no lessons learned unless there's some pain involved, unfortunately. So when you talk about that Ponzi scheme, what did you learn from that? Because again, that we're facing that every day in crypto. So yeah, what has that taught you going forward?
If things sound too good to be true, they're probably too good to be true. That's one thing right there. My attorney called it early, and I just didn't listen to him. My attorney said these legal docs are garbage. Whoever made these is not a good attorney. I'm skeptical, not just because of the fact that here's another one, guaranteed return. So he was skeptical of a guaranteed return. He was even more skeptical that the docs were just garbage. And he said, they don't have good legal counsel. Like I would not invest with them. And I didn't listen to him.
Yeah. So I think
that's just a handful.
Yeah, absolutely. And I think there's a ton of principles that just go through all investing, no matter what it is. If it sounds too good to be true, it probably is. Guaranteed returns it doesn't work that way in the real world. Get your principal out. That's something I tell people all the time is, hey, no matter how good it looks, don't just keep compounding. Get your principal out because you just don't know. Good things fall apart and bad things work out sometimes. It's just the nature of how investing is. So I think those are all super good lessons. Last thing that I have for you before we kind of talk about how people can get involved with you. Have you noticed, in crypto, we've experienced a strong bear market. Have you noticed that in your deal flow, or is your deal flow kind of just been pretty consistent and normal, even through this economic, we won't say recession, but recession?
Yeah, apparently we're not allowed to call it a recession, even though this is how it's been defined for decades. But yeah, I'm still getting consistent deal flow. I mean, I could make the argument I'm getting more deal flow than I've ever gotten right now in a time that maybe you'd suspect that there'd be less deals going on. So and who knows? Like, I don't know what's going to happen. I mean, you and I, we could make our own guesses. It's pure speculation. Like, we could say, hey, things are going to get worse, and then the Fed decides to inject more capital into the system, and does another stimulus or whatever, and then it booms. So, like, no one knows. But what I do know is that I want to own assets, and moreover than that, I want to own assets that produce income. Because when monetary supply expands, then your dollars that are not invested in a strong asset are shrinking. So you make less money. If it's in the bank, if it's, whatever you're in, you make less. And with inflation as high as it is right now, 9% realm, or high 8%, with this new CPI index, which, by the way, the CPI is not even accurate. It doesn't even take into account food and energy, which are like your two biggest indicators. So it's way higher. But
I mean, who buys food and energy? Nobody needs that.
Right. So if you're not at least making 10% on your money, you're losing money. Plus, more money is being printed. So you want to buy things that are going to hold their value, that are not going to go down, that are going to appreciate. And as monetary supply expands, the value of assets expands.
Okay. Yep. Super, super helpful stuff. Okay. Well, as we finish up here, again, I think what my audience needs and what they would want is financial education, which you can provide, and potential deals, I think, are the two things that they'd be looking for from you. So how can people get financial education and potential deals from you? And maybe let's start with like the cheapest option, and then we can work our way up to like, when here, if you want to put in more, you can go all the way up to here. So what would some of the ways to get involved be?
Yeah, I've got a ton of options. Again, we'll start with free. So if you go to justindonald.com, you will see a blog, which is free. I've got a podcast called The Lifestyle Investor. That's free. And by the way, I've got some incredible guests that are coming on. We're a top 1% of all downloaded podcasts, and just incredible talent showing up, sharing wisdom, which is cool. I've got my book, and something I told James I would do is I want to give all of you a free copy. So if you go to lifestyleinvestorbook.com, that's where you can get one. You just pay shipping and we'll send it out to you. I've got an online course that is kind of like the next step up from the book. I've got 2 different master classes, a mobile home park master class, and I've got a passive income master class, which is like a one-day event that I repackaged to be kind of a standalone product. And then I've got a mastermind, the Lifestyle Investor Mastermind, which is, really just, I would say, one of the greatest collections of brilliant people, people looking to get better at investing, just of anything out there. I would call it like the premier group for, an average person to become a sophisticated investor and to get deal flow and to learn how to invest and to create cash flow, but with other like-minded people and with my Rolodex of experts. So it's, there's a big application process, and so it's not the right fit for everyone. But if it is the right fit, it could be incredible. But there's stuff at every price point. So, I just want to help people figure out how to do it better and to do it different. And I can assure you that what you learn from Wall Street is not what you want to do today. This is an old, broken system where they make money on your money, whether you make money or not. And that just doesn't work today. Not for me, at least, and not for what I call lions, those that are in my community, like you, James.
Yes. Yep. I'm a part of that mastermind group. So I love that there's a range of things for everyone. So go listen to the podcast. That's totally free. Get the book. That's free, just shipping. The course has been super helpful. Yeah. And then if you want to do more, when you pay money for something, you actually take it a lot more seriously. And you want to make sure you wring everything out of it. I remember when I joined your mastermind, I went through every piece of content you had in like 3 weeks. Like I was just listening for like hours every day because I didn't have a job or anything. And I was like, man, I paid for this. I want to make sure I get everything out of it. And I've learned more being in there than in the 33 years of my life before being in there. So it's been super beneficial for me. So I thank you for that. It's taught me a lot.
Well, thanks for the kind words on that, James. I appreciate it. And I love being able to tell people like, hey, pay attention to what James is doing. He's like the model guy. He's going back and he's watching everything. And I couldn't believe how fast you got through all that content. It was incredible.
Well, and honestly, you're a big part of why my YouTube channel has been successful because when I talk about finances, I know more. If I had done this a year ago before getting into your mastermind, I think I would have just sounded like an idiot, like, oh, I don't know what I'm talking about. But I've learned so much from your group that I've been able to, when I talk about finances, like, oh yeah, I've experienced this and this and this. I've been in this deal. I remember the first meeting I was in with you guys, and you were talking about warrants and things like that, and I was like, oh man, I got a lot of learning that I need to do. So yeah, very educational, super helpful from that, and not to mention the deal flow. That's also very helpful. But I think the education's been more helpful for me. So
I was going to say, like, it's great that you see the value of education. People spend all this money on going to college, and then they usually don't use most of it. And then people stop investing in that type of education that's actually more relevant for what they do. And what's more relevant than your financial future, your financial education? So I love seeing that you're doing that. And I hope more people take that seriously. The opportunity to save on taxes is unparalleled. Like, most people, for the cost to do any of the programs we have, the mastermind, they make that up in taxes alone. And then, of course, there's deal flow, which is more the alluring thing. People say, oh, I want deals. I want passive income. But most people realize that the value that they thought, the thing they thought they wanted wasn't the greatest value to them once they got in. Most people wanted the passive income, but when they showed up, they realized they could save way more in taxes because the best return you'll ever get is figuring out how to pay less in taxes. That's more than any return that most investments will deliver. And then being in a like-minded community with some of the smartest people in the world.
Yep, absolutely. And I'll say from Will, who I met through your group, saving high six figures in taxes this year, just from a couple meetings with him and some strategies that he put in place. I mean, that alone, super, super valuable. And I'll say the one of the main things I learned from you too, one of the aha moments from listening to all your content was when you did the math of if you lose 50% and then gain 50%, then lose 50%, then gain 50% on your financial statements, it'll say, oh, an average 0% return. But when you actually run the numbers, it's a negative 40% return. That's right. That was eye-opening to me of like, oh man, we got to stop losing money on these deals. So it's funny that I'm in crypto so much now because I lose money all the time, but do as I say, not as I do necessarily. So,
well, I think it's great to be in crypto. Just figure out an allocation where you're okay with the big swings, but maybe not have 100% of your assets in crypto. I just think there's a time and a place for everything. Just like I'd say, don't have 100% of your assets in the stock market. Don't have 100% of your assets in real estate. Don't have 100% of your assets in your own business. I think it's smart to diversify.
Yep, absolutely. And I don't know, maybe I can get your thoughts on this. So what I've been kind of like teaching in my audience is if you have money in these like super degen plays, you take your profits out and get it into safer places. And you keep getting it into safer buckets until kind of I have real estate as kind of like the safe bucket in my thing here. But that's kind of how I think about money is you can make it in a lot of different ways, but then your goal is to get it over to safety, basically, is to rescue that money and get it over to safety. So that's kind of what I've been teaching my audience. And I a lot of that I learned from stuff I learned in your group. So
I love that. I hope everyone keeps listening to you. I think that's phenomenal education. And I think the moment you make money, take the gain. just lock it in so you can't lose. That it's way better to lock in not losing than it is for a little bit more upside.
Awesome. Well, hey, Justin, thank you very much. I'll let you go here. Appreciate you very much. I'll put all the links for everything we talked about here today. And I think this was great. I think my audience will love this. During the bear market, especially, I think that's when you can really educate so that when we get to a better market, you're in a position where, okay, now I know what I'm doing. Let's ride with this. So really excited. And thanks so much for your time.
Well, thanks, James. It was great being on, and thanks for all the great work you're doing. And what you're doing to educate people is incredible. So keep it up.
Awesome. Thanks, man. All right. I hope you enjoyed that interview with best-selling author Justin Donald. Again, one of my greatest mentors. If you want to learn more from Justin, there's a few ways to do it. He talked about it in the video. The first is if you go to lifestyleinvestorbook.com, and I'll put a link to that in the description, you can get his book for free. You just have to pay for shipping. I think $10 for shipping, and get that book for free. A completely free option is there's the Lifestyle Investor podcast. So you can check that out, listen to that. I listen to it every time that I can. He's got great guests on just talking about different things. The blog is free as well. If you want to get in a little bit deeper, there is a training course, and you can see all these at justindonald.com or lifestyleinvestor.com. But there's a training course that you can go through where he just kind of teaches about investing and lifestyle investing, how to stop trading time for money so you can enjoy more of both with the people you love. So it's been super helpful for me. If you want to get even deeper than that, so it's kind of podcast free, blog free, book is shipping and handling. The training course is going to cost a little bit more. He has 2 master classes. One is mobile home park master classes. One of his favorite real estate investments is mobile home parks. So if you're interested in that masterclass will kind of teach you everything you need to know. And then he has just a passive income masterclass, which is also very helpful. So those would be kind of mid-range. Those do cost. Those would kind of be mid-range options. And if you're really, really wanting to get involved with Justin and become part of his mastermind and part of this group, and honestly, this group has been super valuable to me just with meeting other people. I mean, just hanging out in a room. Like I'm one of the poorest people in the room when I go in, and that's the type of room that I want to be in, is where I'm the poorest. And there's people that I can kind of look up to financially and say, hey, what have you learned? What can I learn from you? And I've learned so much in this group. So I'll leave a link to this as well. You can apply there. It'll just be a call with Justin, and he'll ask you kind of some of your goals and things like that to see if you're a good fit for that. But so those are the ways that you can get involved. I hope this was helpful for you. If you do like the more educational content, again, no projects today, but yeah, please leave a like. Appreciate it. And I hope all of you have a great rest of your day. Thank you.